Okay, so on the left, we've got the Euro-US dollar weekly chart, and on the right, we've got the Euro-US dollar hourly chart. And on the weekly chart, what we have is what we call a reference candle reversal. So there's three conditions for a reference candle reversal. The first condition is you need a candle that's got the highest high in at least three candles. That's this candle here. Then you've got condition two. Condition two is price moving below the reference candle's low. And then condition three, which is everything, is you've got price actually closing below the reference candle's low. And that's effectively locking in a swing high. So if there is a swing high that's locked in, then there is a bias towards the downside. And what you can see is that the RSI has also popped below 50. So once you go below 50, you're on the bearish side of the indicator. It suggests that there is an underlying bearish momentum. What's keeping Euro-US dollar afloat at the moment is this resistance, the support area, which is round about the 107.25 area, right? But what we need to keep in mind is that if the RSI remains below 50, the underlying bearish momentum may in fact push prices to break down below this support area. What I would keep an eye on is the stochastic. If the stochastic slips down into the lower quartile, then there is a buildup of that momentum. In fact, there would be a certain strength, which would suggest that the underlying support is going to be tested. And again, if we hold below the lower quartile on the stochastic, and if the RSI holds below 50, I would expect that underlying support to effectively crack. It really is going to depend on the real rates. If the real rates continue moving higher, I think that does act as a headwind to the Euro-US dollar. What you can do is you can just keep an eye on the hourly. So if we go through to the right chart here, and if there is a cross to the downside on the EMAs, in other words, if the green 5-hour exponential moving average crosses below the orange 10-hour exponential moving average, and if the hourly RSI crosses below 50, okay, then we're starting to get the shorter term time frame starting to sync up with the longer term chart. And again, just keep an eye on that stochastic. Already the stochastic has crossed down in terms of percent K and percent D. And that we call that trigger one. The EMAs will be trigger two. If we get the two triggers there and you get the stochastic dropping down and hitting the lower quartile, then there is probably going to be a downside pressure. We're going to see the weekly support being tested, and if the real rates continue to push higher, then there is a real possibility that the underlying support on that weekly, that 107.25 area, actually breaks down. Okay, thank you very much for that.